Hi everyone, welcome back to the channel. So today we'll be diving into the latest trade agreement that has honestly come out from nowhere, and it is way bigger than anyone expected. So the US and China have just agreed to a major pullback on tariff, and if you've been following the trade tension in the last few months, you know this is a big deal. So let's break it down. So first, the headlines are this. The US will reduce its tariff on Chinese goods down to 30%, while the Chinese will cut its tariff on US imports to just 10%. And this is a serious de-escalation because, according to the video with Scott Bassett,
so the levels have come down to the pause level, and what I would say is 34, which is their assigned April 2nd level, would be a ceiling, which is what I went out and told people on April 2nd, which is why I was surprised market participants panicked, because we had capped the upside for every country, and if they didn't retaliate.
So the final tariff range will likely settle somewhere between 10 and 34% depending on the industry. Now that is still pretty high, but it is a long way from the over 100% duties or tariff that was imposed earlier this year. But before anyone gets too excited, just remember not everything is going away. Firstly, the 20% fentanyl related tariff introduced in January will likely stay in place because this is aimed at reducing fentanyl, and I think right now Donald Trump is still not getting what he wants on that front. And remember those tariffs back in the Biden era where there was a 100% tariff on EVs and a 50% tariff on solar products? So those will stay as well. Now let's talk about the real game changer in this deal, and they are the rare earth minerals. Beyond the headline tariff reduction, this trade agreement includes something far more strategic. China will ease some of its countermeasures on rare earth minerals on the US. And these minerals power everything from fighter jets, smartphones, EVs, robots, AI chips, you name it. Even Elon Musk was reportedly negotiating over this because Tesla's future, especially with AI robots, hinge on having access to all these rare minerals. So yes, US companies are now expected to have an easier time to get rare earth out of China, but let's not pretend this is a free pass. China is not lifting all restrictions, they are simply streamlining the permits application for US buyers. The key restriction remain in place, and that is by no accident. Because China knows that rare earths are its trump card, with all pun intended. Just look at the numbers. China accounts for 61% of the global rare earth production, but it is responsible for a jaw-dropping 91% of global processing capacity. So even if the United States find new places to buy these minerals, they still need China to process them. And that is a major leverage point for China, and Beijing will never give that up easily. And here comes the irony. While China is easing restrictions on rare earth exports, which are crucial for battery production, they are also simultaneously blocking US funds from investing in one of their largest battery manufacturer, CATL. CATL just filed for a massive IPO in Hong Kong, and it could raise over $5 billion, but they are deliberately barring American investors, especially American funds. Officially, it is due to legal exposure, but let's be honest, this is a strategic chokehold. In short, this is what they are saying. You can buy our minerals, but you can't profit from our industries. Now, that's just not a business decision, but an economic decoupling in action. And I believe this is also part of a broader strategy to drain capital out of US market. Now remember, a Chinese company used to view listing in the US with a badge of honor and pride. Wall Street had the highest liquidity, the prestige, and also the access to high net worth investors. But things are changing. Since 2021, Hong Kong stock market hasn't exactly been doing great, but companies like CATL are choosing it over New York. And here's why that matters. As of March 2025, there are 286 Chinese companies listed in the US with a combined worth of close to $1 trillion in market cap. So if more companies were to follow CATL lead, or as the US has been pushing for delisting, this capital has to go somewhere else. Guess where it is going? It is likely going to benefit Hong Kong and even China market itself. Because if you want to invest in top Chinese company going forward, you may have no choice but to go through these stock exchanges instead. Now overall, don't get me wrong, I think this trade talk is going to be really beneficial for the United States and also the companies that are listed in the US. As we can see yesterday, the stock market has gone up tremendously. But just understand that the uncertainty has not been reduced by too much, and all these deals could still change. And from this entire sequence, the rare earth, the tariff, the CATL listing, there's a very clear message from China. If you stand up to a bully, they will back off. So while Trump is right now taking a victory lap
and compete with China, it would be a lot of jobs for China. It would be, I think, at a time when they can frankly use the jobs. And that's what we're talking about. So that's a very, very important element to add. So when Scott, I watched him speak the other day, and I think he didn't want to say it, but I said, it's okay to say it. Look, if we don't get it, we don't get it. But if we don't get it, it won't be a positive thing.
The reality is that the US backed down first, and this is not a case of China caving in. China merely matched the US step by step for the reciprocal tariff adjustment. But this is still a win for Trump because a 30% tariff, which he started off at over 100%, suddenly feels reasonable. And that is the standard persuasion technique called anchoring in negotiation, and China knows this game as well. So it seems like all these tariff talks and negotiation brought us back to the original point before 2nd April, and right now is where the real negotiation starts. So where does this all leave us? Now the tariff might be lower, but the competition between US and China is still going on. US may have better access to rare earth minerals, but US capitals are starting to get locked out from Chinese investments. So therefore, as investors, it is important to diversify your investment between China and also the United States to make sure that while the two sides are fighting, regardless which side wins, you will stand to benefit as well. So if you find this breakdown useful, hit the like button, smash the subscribe button, and turn on all notifications so you won't miss the next update. And I'll see you at the next video.